It is full year results time here at XP Power. I have been following this company for quite a few years now. There have been record numbers for quite a few years. And joining me now is Gavin Griggs, the CFO, Chief Financial Officer, and of course, CEO Duncan Penny. Let's start with the numbers, Gavin. Are you breaking records still? Has it been another good year?
Yeah, it's been a very strong year. Order intake up 38% on the previous year. Now, we have benefited from Forex in there and the acquisitions of Comdel, but the organic business up 31%, very, very strong. That's translated into good revenue growth. Now, revenue up 29%. Again, currency's been favourable, Comdel favourable, but the organic business still up more than 20% at 22% growth on the prior year. Very, very strong top-line performance.
We'll come back for a bit more detail behind those numbers, but the name Comdel there, mentioned several times. This is Massachusetts-based company that you have merged with, taken over, and in the radio frequency sort of sector. Tell me more.
Well, we've said for some time that we wanted to do more mergers and acquisitions to get more growth on the top line and bottom line, and we've talked about going up the power level to higher power products, and Comdel fits this. It's a nice company. It's in another nice niche for us. You said it yourself, radio frequency power. Related to power, but a bit different to what we do. So we tend to take the AC mains and convert it to DC. Interesting enough, what Comdel do with their products is they take the AC mains, convert it to DC, then they convert it back to AC, but very high frequency, at radio frequencies. And these products are used in lots of interesting applications in technology and industrial, so we're really excited about what we can do with that product line.
Gavin, let's come back on some more detail behind those numbers. We know we're kind of past the post on Brexit now, but still a lot of uncertainty. But maybe talk from XP's point of view about FX and also taxation in areas like the US.
Well, FX has been a benefit to us this year at the profit level. Now, the benefit, one of the positives about XP is we are naturally self-hedged. So about 80% of our revenue is in dollars and 100% of our cost of goods are in dollars. So we're really only exposed to a small amount to movements in the British pound or the euro. So it's been a tailwind for us, benefited this year. The other big news, I suppose, was the changes at the end of December in the US tax. Again, that is going to be a benefit to us going forward. Our largest business is the US. The tax rate we're going to be paying is dropping from 35% to 21%. And our overall group tax rate going forward is going to be around 15 to 17%.
Gavin, what about dividends based on the last year's results?
Well, the board has discussed them and we're proposing a dividend of 78 pence, a total dividend of 78 pence. That's 10% up on 2016 and continuing our progressive approach to dividends.
Duncan, talk us through, we're hearing how obviously important the US still is, but we've also seen growth in recent years when I've spoken to you in Asia, and also bring us up to date here in the UK.
Well, in terms of geographic mix, the thing that is evident from the numbers is we've seen growth across all geographies and we've seen growth across all sectors, and by sectors I mean industrial, technology and healthcare, which tells us there is a broad recovery going on. The smaller customers that we deal with through our online distribution channels, they're up significantly. So again, that's a good indication that we've had a general improvement in the market conditions. But what's very gratifying to us is that we've had really good growth in healthcare, reported numbers up 36%. We called that out over a year ago that we thought healthcare was going to do very well for us in 2017, and that indeed ended up to be the case. And then the semiconductor manufacturing sector, which is, for us appears in technology, reported numbers up 55% for technology. So we've seen really good growth in the semiconductor manufacturing equipment sector. Part of that is a cyclical recovery there, but also we've had a lot of new program wins, and the healthcare is purely new program wins. So we know that the healthcare market isn't growing at that sort of rate. And when you look at the growth, I think particularly in the US, which grew really, really strongly, about half of that growth came from the semiconductor manufacturing equipment makers, about half of it from healthcare. And that healthcare is a really nice area because it tends to go up in lumps and it's a new base on which we can build. And I guess the next thing you might challenge me on is the cyclicality in semi-fab. And we just see that as a really good market. I mean, there's silicon going into everything. There's the Internet of Things, augmented intelligence, big data. You know, it's just a very long-term good sector for us to be in, and they sort of value our value proposition, so we're quite happy to be exposed there.
Mergers and acquisitions have been very much a theme with XP since I've known you anyway, and obviously the Comdel is a milestone in that. From the money side of things, have you got the money in your back pocket for him to carry on with his M&A ambitions?
We're a very highly cash generative business. So yes, we took on debt to fund Comdel, but our gearing is 0.22, so it's a very, very comfortable position at the moment. Look, we're actively looking for other bits of bolt-on acquisitions, but they're probably at the same level as the Comdel size. And our banks are very, very supportive and be happily to lend us as we require.
Duncan, what is the strategy behind M&A? And that might sound like a really basic, stupid question from a business correspondent, but is it to just grow to sell? Is it to increase the position for investors? Is it to make your life better, or what?
Yeah, I think to think about the way we think about M&A is that if you go back to our customer strategy, so we're dealing with all the customers we think we need to be dealing with, the top guys in industrial, technology and healthcare. We have a very small share of what's available in those customers. And to increase our share there, what we want to do is actually have more products so that we've got more chance of addressing the opportunities that we see. So we've been adding a lot of engineering resource. We don't need a lot more sales resource. The sales guys are bringing in more opportunities than our engineering functions can deal with. So the strategy for M&A is to actually get more products that actually we can put through our powerful sales channel and address more of the opportunities we see. And again, we talked about high power, and Comdel fits that. So we're looking basically for more products. And I guess the Goldilocks acquisition for us would be something where they've got technology and products that we don't have, that they're selling through distribution channels perhaps, because we have our own direct sales channel. And if they're actually outsourcing the manufacture, even better, because we've got our own low-cost Asian manufacturing. So that would be the absolute Goldilocks acquisition for us.
Okay, let's move from Goldilocks to the bears or the bulls, because we always ask you towards the end of these interviews, Gavin, to get your crystal ball out. So from the numbers point of view, within the parameters of what we can say in interviews like this, what is 2018, the rest of the financial year, looking like? And what are the key milestones as far as the financials are concerned?
We had good momentum all through 2017, and the fourth quarter was equally as strong as the previous three. We exited the year with book-to-bill on 2017 of just over 1.11. So we generated more orders than we had and revenue. So we're entering 2018 in a very good position. Backlog was 20 million higher than the previous point last year. So we're in confident mood for 2018.
Duncan, same for you, crystal ball, and maybe mention Asia and Vietnam, because we were talking about possible expansion, new facilities out there as well.
Yeah, well, I think Gavin summed it up really nicely in terms of how we're entering 2018 and what we're thinking about it. The challenges are hiring more engineers, and you alluded to it. The good thing is we need more manufacturing capacity, and we broke ground on a new factory in Vietnam on the existing site of the factory we've got at the moment. That should be finished in the third or fourth quarter of this year. So we need more manufacturing capacity. So that's more good news really for us. People
is a key issue in your business though, certainly IT and in power as well. We know that because we deal with people in that sector now. We've got new people even here behind us. So can you cope with that? Are you going to find the right people at the right time?
That is probably one of our biggest challenges, particularly in North America, where the competition for talent is very high. The type of engineering we do, there's not a lot of resource there. So it is challenging to find the right people, particularly in engineering. But I mean, the nice thing is that with the success we've had and the way we're taking market share, I think people from our competition look at us as a very attractive place to be, and we've been quite successful in actually luring people away from our key competitors to a much more growth-centred company, hopefully with a good energetic culture.
Well, certainly there's been plenty of energy and growth in this company since I've been following you. Duncan Penny, Gavin Griggs, thank you very much for joining us.
Thanks, Nick.
Thank you.